The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
Okay, I will be setting in for David White. This is Larry Pesavento. David's he is very busy today, so I'm setting in for him. I love his stuff. He's one of the smartest dudes I know, folks. That guy, he's got a wealth of knowledge. He's like Mr. Google himself. The question, by the way, those of you that are I'm going to be setting in for Tom O'Brien right after this too, so I'll be doing that show. And at 1:30, let's try that again, at 3:30 today, Eastern Time, Mike Moore from Moore Analytics, who was just on my show, is going to be doing another cameo appearance on the Tom O'Brien show. So that'll be in another hour and a half from where we are right now. Now, one of the questions that someone asked me beforehand, and I assume that the same questions that David have are pretty much like what I have, is what do I do each day? And basically, folks, I'm a pattern recognition swing trader, and what I try to do is to look for patterns. My main one is ABCD. I posted it here in the den today for you to take a look at it. This was the price of the crude oil. As you can see here, the little things that look like happy faces there, that's just the cycle from the low to the high. And all you're doing is you see that red line that looks like the thunderbolt. That's the AB equals CD pattern. And as you can see, it measures right up to where the high was. And from that level, it dropped a little over $1,200, rallied up, and is now continuing to drift lower as of today. So what I try to do is I match up the time and price together to see if the pattern will fit perfectly. Now, do they fit perfectly all the time? No, they don't. But when they do, like this one, it gives you a really good opportunity. The only thing wrong with that is that there was another sequence of numbers that I was looking at, and that made it a little more difficult for me to get the trade off because I missed putting the trade on by about 10 pips. What doesn't sound like very much, but let me just show you the difference here so you'll be able to see it. I happened to be chatting with someone at the time this was happening, and they asked me the question, well, why are you doing it this way? And I will tell you that answer right now. And there is the same chart, only what I've done is I've marked what the 1.618 expansion is. In other words, if you were to take this distance from your high down to your, from the low to the high, and put in the retracements and expansion numbers. The first expansion number is 1.27, that's right here, and there's 1.618. I know that if it gets above 1.618, I'm probably in deep trouble. And you can see here was the D point. Okay, that's where it should have been sold. The difference between this, folks, was $100 in a contract that trades for $78,000. I tried to get a little bit too close to that, and I missed it, and then it came down. So you miss some, you win some, but you just got to, and believe me, I shook it off as quick as I could because I had other things that were doing pretty good, treasury bonds and some other things that were working pretty good. But that's what you're doing each day, and I don't stand in front of the machine all day long. I don't do that. I do other things. I have alerts on that are quite loud so that if the alert comes off in crude oil, it will tell me, we got to pay attention to that. And I have a lot of them going off in the foreign exchange markets today. So that's really, what I do. I watch certain, commodities. My favorites are crude oil and gold, S&P 500, treasury bonds, natural gas, and of course, soybeans, wheat, corn, and also live cattle, and sometimes hogs in there. And I watch others. Anything that's got a good pattern, I want to be able to see if I can make a buck on it. That's really what I'm trying to do. Now, one of the things that I've done in the past, I haven't done it for a very, very long time, and I'm not going to do it now. And that is, I used to do a trade of the year, and I wanted to bring that back because someone asked me the question about it, what happened to coffee? And I'll bring it up here so we folks can take a look at it here. You'll see here is the coffee chart. Now, right here is where I thought it was going to be the trade of the year, right there. And we had a very nice move Okay, beautiful ABCD pattern here. And all I told the folks was, you just put your stop at break even, because if it gets below there, there's something wrong. And you can see it went all the way down. It made a new low by about 25 cents, which is over $5,000 per contract. And then you can see it had this tremendous move up. It just never looks back. Once that bottom has finally been made, and it goes up every single day, doesn't even back off at all. And that's the nature of markets, folks. So here was a break-even trade. It could have been a loss of $5,000. That I wouldn't have liked. And then, of course, it had a pretty big move to the upside. So as far as the trade of the year, I don't do those anymore for one reason only. People ask me every single day what's going to happen next, and I don't know the answer to that. When I look at a trade of the year, if I do that trade of the year, like if this could have been the trade of the year at the high, I'm not going to do anything to that until I see some type of a major move unfolding. And so it gets a little frustrating. And of course, when you're trying to do too many things, which I probably do too much of that, then that's pretty much what we're looking at here. Now, I want to spend just a moment here to talk just a tiny bit about the natural gas. So if you will bear with me here, I want to get the natural gas. Hold on one second. It'll only take me a minute to get I think it'll only take me a minute to get the natural gas contract up here. And there it is. And we'll be able to see what's happening, because we've had a pretty nice run here. And just give you well, you can see how far we've come down into natural gas. This is the daily chart. I'll bring that one to you, and then we're going to look at the weekly. Jim Bartolioni of Bart's Charts will be my guest on my show next week. He's just stacked up this week, so he's not able to do it. But you can see this is the daily chart. We had a beautiful ABCD sell pattern up in here. You can see this, the perfect Gartley, just about exactly the way you want it to be. But if we look at this and go down to a weekly chart, you'll see that we've been waiting for this bottom to come in for a very, very long time. And we tried it from the long side it's been five weeks ago already, and the market has continued to go down. And that's one of those situations you'd rather be on the outside looking in and the inside looking out. In other words, you don't want to be long as this thing keeps going down, down, and down. So Jim has found some really good cycle stuff that I don't want to steal his thunder, but it's got some really good stuff. The thing is that we've had a pretty good rally. All I want to do now is I'm going to go down to a 4-hour chart just to show you what's happened to natural gas here in the last 5 weeks. Okay, and you're going to see nothing. This market has not turned up yet. It's getting close, but I don't believe that it is turned up. Let me get this up here so you'll be able to see it here. And you'll notice we did have a really good rally from 05. We got down to 205, okay? And then we rallied all the way up to 271. We rallied 65 handles. Now you're sitting right at the 382 of this high right here. We need to back off a little bit, okay? And then we got a chance. Hey, let's take a break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, Larry Pesavento setting in for David White. What I've done here, folks, is I posted the chart of the natural gas, the 4-hour chart, because we've had a nice rally, 65 points off the bottom. And now what we're doing is we're in a little bit of a consolidation area. As you can see, it hasn't backed off very much. But what I would like to see is you can see that little red thing here that we called it the Thunderbolt pattern. If you see that, I don't know what these levels will be, but after this one is formed, and this one is formed, it tells me what this one's going to be. So I'll be watching this, and I'll be watching this on a 4-hour chart. So when I see this pattern right here, I don't know when it's going to happen. It might happen from way up here, but by golly, it could happen down in here too. So and maybe this isn't even the bottom. Maybe we got another port to go, because remember, we had Basil, we had natural gas at 1.6, folks. The low so far has been 2.05, but natural gas for a whole year stayed at around 1.6, right during the war, that 1 year war that we had. Well, that war is still going on, but for a whole year, it didn't move very much. And then, of course, it exploded and went up to 10. And then from 10, it's dropped all the way back down to 2. Boy, there's a perfect example of, you got to be careful of what you read with fundamentals, because it can really get you into a lot of trouble. So that's what I'm looking at. That pattern that you're looking there, that is a Gartley pattern. And Gartley said in his book, Profits in the Stock Market, written in 1937, he said, if you see an ABCD pattern at a higher bottom, that's where you want to be buying. You don't have to try to pick the bottom. Just wait for that ABCD at a higher bottom, and that's the one you want to look for. It's right about 65% of the time, but when it works, and boy, oh boy, when it works, it really works. And that's basically what you saw in the gold market today. I didn't quite get the buy-in the way that I wanted, but my goodness, it was everything that I could possibly ask for. I'll bring this pattern up so you can see it, and we'll be able to take a quick look at it here. There's the gold again. This is nothing more than, of course, a 15-minute chart. You see the market makes a higher bottom with that little ABCD pattern right here, stopping exactly at the 618 retracement at 1414. and then away it goes to the upside. So those are, the kind that you hate to miss, but I missed a couple today, and but other than that, you have some good ones, you have some bad ones. Someday it's chocolate cake, someday it's vanilla cake, but it's still cake. So you got to give you what the market can give you. I've had a question from someone, from David's show, I guess, to ask to take a look at a stock that I know nothing about, and I'll bring it up here. And what I'm just going to do is, since I know nothing about this stock, I don't even know the name of it. All I know is the symbol. And the symbol is STLA. And this is basically what the charts look like over the past year. Now you can see what I'm going to do now is I'm just going to put the patterns in, because all the stocks, anything that's actively traded, and I think anything over 100,000 shares a day is certainly active trader, but it works with penny stocks too, because I've seen the same patterns in penny stocks. But let's take a quick look now. If we take a look at this and just put some of those patterns in that we look at, it will give you a pretty good idea of what this thing might be doing. So just give me 1 second here, and I will get it up here, I hope. And I think I did everything right on this one to get it right. So up, and there it is. It's right here. Okay, and it's STLA. I wish I knew what it was, but not privy to that right now, and we'll be able to take a look at it. And there we go. And we got a caller in from Niagara Falls, I guess. Michael, are you there?
Yeah, hi. Thanks for taking my call. I was wondering if we could look at a couple of issues. First one, we're going to look at the Philadelphia Gold and Silver Index, the XAU.
XAU, Philadelphia Gold. Boy, I haven't seen that since Hector was a pup, and that dog's 14 years old. Let me get it up here, Michael, and I'll get it up here to take a look at it. How's things over there in Poland? You enjoying yourself?
It's so here. It's
cold,
it's
right?
not so rosy. That war ain't so rosy. It's it may expand, and the soldiers here, they're a little bit nervous. Yeah, and I can tell you, these guys, they're well built. They're in the gyms. They're in the local gyms here. They are svelte. I mean, they're well-built guys, and in the summertime, they were really in a good mood. Their girlfriends came over, and they went shopping and partying. Now they're really kept to themselves. They're very quiet. They've got their game faces on. And that's telling. And guess what? They're all from South Central L.A., 82nd Airborne, 101st Airborne Regiment. So they're signaling to me there's something coming soon, some kind of a conflict.
Wow. Hey, listen, I can't get XAU up, so I'm sorry for that. I don't trade.
How about the GDX then? Let's look at the GDX.
Okay, GDX I can get. So just bear with me here 1 second. And how's the weather? How cold is it over there? And where are you?
It's about 5 Celsius. It's cold at night. We get the snow. We get snow, but not as much as I guess you guys got lately, huh?
Yeah, I got snow in the mountains right behind me for sure.
Yeah, I know.
Let's take a look here at this next. I can get
cold.
The GDX here.
It's cold here.
Like
everyone wears winter jackets and stuff, I wanted to look at that at the gold and silver indexes because I was wondering do you have some projections there on the monthly, weekly, and monthly? What are your downside projections?
Today 1810 to me was very, very important in the gold because it was a 50% retracement of the whole move from 1618 all the way up to 1975. Do the work yourself. You'll see that the 50% retracement came in on April gold at 1810. I didn't see it till after it was hit, and then it rallied up, backed off a little bit, and then it took off like a scalded goose, and we had a $30 move up from that low level. We hit almost 1840, so I think the bottom is in gold. Now, I could be wrong. Any move below 1810 would certainly be wrong, but I think there's a possible bottom here in the gold market.
You think so? But the GDX, the gold equities, they're not really moving up, are they? I mean, they're just sideways.
Michael, you're asking me something I don't understand. Tom O'Brien knows that stuff, and I really don't understand the fundamentals behind the gold miners, and especially the GDX index itself. I really don't know very much about it. I know the chart. I can see what the chart says, that it's in an area where it should be bought. That's basically what it looks like to me.
Okay, so say let's be hypothetical here. Let's say the Dixie goes back to its September high, around 114.
Mm-hmm.
Okay? Where would that take the gold contract down to?
Oh, boy. That would probably take it down to about 1,200 or so, I would think.
Really?
Yeah, we could
April
easily
or maybe
do that.
the May. I guess they would roll from April to the June contract, or is that the August contract?
It would be into August contract by then, yeah. But you could easily, if we go below that 16, 18, gee, there's nothing below that. There really isn't. So,
really?
Yeah. Hey, Mike, thanks for joining us, my friend, and stay safe over there, okay, buddy? We'll be right back, folks. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. This is Larry Pesavento sitting in for David White today, and we just had our guest calling in from Warsaw, Poland. Mike had lived in Niagara Falls for quite a while, and being Polish, he wanted to go over there and spend some time, so he's over there, and like he said, there seems to be a lot of U.S. troops over there that we don't know anything about, so whether that means anything or not, I'm not sure, but I don't follow the news at all, folks. When I tell folks that, when I try to tell them that when I don't understand something, it's because I don't understand it. I'm not going to sit here and try to make up something that may or may not be relevant about the markets. But if I don't understand it, I'm going to tell you that. But if I See it in a pattern, that I can understand. Patterns, I know. I've looked at thousands of these, hundreds of thousands of these over the past 60 years. And I started in 1959, believe it or not knowing anything about patterns. But that was the very first trade that I did. It was elastic stop nut. It was a little plastic, nuts and bolts that they use nowadays. It was the first part of the plastics. If you remember from The Graduate, they said to Dustin Hoffman what to go into, and he said plastics. Well, that was my first venture into it. I bought the stock at 3, and it went to 6. It was my grandfather's brother's money, my uncle, and he gave me the $300 to buy my first car, which was a 1949 Mercury, and that was a nice car. I wish I still had it. Anyway, let's move on to a couple of other these things that I wanted to talk about. We were talking about this stock called STLA, and I want to bring this up here just to show you the fact that I've never seen this stock before up until today, about an hour or so ago. But look at you can see the ratios, but look at the beautiful 3 drive to a bottom pattern right here. Then the market comes up and makes a double bottom right here, one of the favorite patterns of Andrew Lowe in his book, The Non-Random Walk Down Wall Street. The market goes up and completes the A, B, C, D pattern right at the 50% level. It backs off to the 50% level, and it goes up and completes another A, B, C, D pattern in this area right here. So this has been a much better than acting stock than we've had in a while. And believe it or not, I think we have another guest coming in here. And let me see if that is the case. It's Jim from Florida. James, how are you doing, my friend?
I am doing fantastic. Pretty lucky that I was driving and listened to your show, your normal show between 1 and 2, and which was great. And I can't wait for the 3 o'clock to get Mike Moore back and look at the charts to see what you guys were talking about. I've switched from the E-mini shorts to the MES, which is the micro mini. So 3 contracts are $15.
Sure.
4 contracts are $20 per point, and I'm getting stopped out with these low profits, and I'm missing the big 10, 15 points in the E-mini. Mm-hmm. And so I'm short right now at $39.97. Mm-hmm. We're trading around $39.92. I'm just trying to figure out.
Okay,
do you let this one ride this afternoon?
Okay. Jim, what is big for you? You just said that you're missing the big moves. We moved 7 points in the S&P. Is that
10 to 12 point move in the E-mini, which is we've had some of these every day.
Oh, we have them all the time.
And so I'm looking at my stops are too close, or else my entry is too low on
you just answered
selling
your
a break rather than. See, I wasn't available to place an order. I really would have wanted to sell it at 4,000. Put a sell stop at 4,001.
Okay, but Jim, you're asking the question, and that is, I can tell you what you're doing wrong. You're watching the machine too much.
Okay.
Am I correct?
Well, part of that, and then when you're on the road, and then you have this midday move,
on the road,
you can't take advantage of it and snug your stop down.
But one of the advantages of using that E-mini is the fact that it's not a big hit. You can put a 10 or 15 point stop on it, and you'll be okay. But if you got a big contract, that's between $500 and $750 in a small account, you can't do that. If you just follow the numbers that it's supposed to go to, watch the ABCD patterns, and it made them all over the place today. I mean, it was up and down. Stop and think. We went from 40.20 all the way down to 39.72, and then back up to 40.10. I mean, this has been a pretty wild swinging day over there. So there's been a lot of those. Your problem is, it's not so much you're putting your stop too close, because you're using a 10-point stop, which is $50, right?
Well, now you start by, depending whether you're shorting 3 or 4 contracts. So now you're talking 200. 200,
yeah, well, yeah, okay, then a few $100. It's not like you're trading a big one. So if your count is, easily $4,000 or so, you can certainly take a $300 hit in something, but don't put 4 of them on. Put on 2 till it starts to work, and then go for it. But if you're watching the machine all the time, I don't care what you're trading or what you're doing, you're going to lose, because that that means all you're thinking about is the money clicking over there on the left-hand side when you're losing and the right-hand side if you're winning. And I'll tell you, you're not going to win that way. So follow the pattern, put the order in, and you should be okay. I don't watch the machine, and I've been doing this for a long time. I used to watch it incessantly. I mean, 10, 12 hours a day. I hardly spend a lot of time in front of the machine now. I do other things.
Okay, I'll look at that.
And Jim, just let me quickly here. You're not going to break this habit overnight. You've got to do it in baby steps. Mark Douglas proved that to me over and over again. First, you watch it, and you stop watching for 10 minutes, and then you stop watching for 20 minutes, and then you stop watching for 30 minutes. And every 30 minutes, you can go in and check. Now, that doesn't mean that you can't watch something else. But if you're in the E-mini S&P, go look at the euro or go look at crude oil, something that you could learn from, but don't pay attention to what the S&P is doing. And then that'll get your mind off of it. Because once you get your mind away from the money, this is an easy game. If everybody could trade for, just paper trade, everybody would win. It's when they put real money up is when they get screwed up.
Exactly.
That's the real problem.
Exactly. And the other question I wanted to ask was, the gold contract has actually changed months, and actually I just noticed the T-bonds have changed months.
They sure have.
So how does that reflect with your charter? Do you just look for the constant?
No,
especially the bonds right here.
It's a very important thing, especially the gold April. Between February and April, there was a $16 spread at one time. It's down to a lot less than that now. But I watched that, but I have to make an adjustment because if I'm looking at the new contract, they're giving me April prices, okay, but the February prices might have been higher or lower at one particular time because it was the lead contract. So I've got to make that tiny bit of adjustment to get where we are. But after about 2 weeks, it works itself out, and it's not a problem. It's just those first few days, the first 5 to 10 trading days, especially in Treasury bonds, because the March are trading at a 1 point premium, discount to the June. And so that makes a big difference. So nothing. You just make slight adjustments, and you're fine, and you should be okay.
Because I just, I had that 124 as at least a ballpark support level on the March, and now we've rolled to the June. So I see we hit 124.09 this morning in the June, but I don't know if that's a relevant figure or not.
Well, that was the buy point today was 124.12, and that hit pretty good. So we'll see. Hey, listen, enjoy yourself down there in Paradise.
Next show, and you have a good day.
You bet. Jim from Palm Harbor. We'll be right back. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, what I've done here is I've posted since the Friday low down there in the S&P at 39.48. You can see the big red thunderbolt taking you up there to that 40.20 level. And then last night we made a 61% retracement right on the money. You can see that was your 61% retracement. From there, we went up to the 61% retracement. We came down. Didn't quite make a new low right near the 78. We went back up, looked like it was going to go up and complete an ABCD, and we still might this late in the day. We could do that very easily. But if we start trading down in this area, and that means we're going to be taking this out, boys and girls, I will tell you that is one flat bearish chart if it does that. I do not know whether it's going to do that or not, because look, we've gone sideways here. We had the big move up. We had a 61% retracement up right there, and we're just going sideways, so we could go either way from here without any trouble. And you're looking at, one of the, I know it's not the Dow Jones, but the Dow Jones is being hammered because Goldman Sachs keeps dropping. They don't like Goldman Sachs today. They loved it when it was about 25 to 30 points higher. But it's down $12 today, and boy, that's not a good sign, because that's such a big factor in the Dow. And believe me, these people that run these algorithmic trades, they know these things. I mean, it's not a mystery. The fact that the Nasdaq is holding up pretty good is a good deal. That's an important thing. But they all work off of these same numbers. I'm gonna do Tom's show here in just about another 15 minutes or so with Mike Moore as my guest. But I want to show you one particular stock here that it's in the news almost every day. And it's Meta. I guess it used to be called Facebook, I suppose, but they're showing as Meta now. So let's get this up here and take a quick look at it here. Hold on one second. Just a minute here. Oh, I got the wrong button. Just a second, boys and girls. All right. This is good that I'm doing 3 shows today, because boy, I tell you, I was visibly shaken this morning when I missed that gold trade. That just anyway, you can see the big ABCD patterns coming down in Meta, folks. This stock dropped 70 points from its high, 70% from its high. You can see down here, gaps down. Nobody wants it at all. Okay, and then as soon as it starts back up, you got to think, who was the sellers down in here? You can see it goes sideways for a long time. And look at this. It goes right up here to the 382 retracement a couple of weeks ago, and it started to back off. And this is a really important gapping area, folks, because this was news-related, of course. But the fact that it couldn't get above that 382 of this high is still a very bearish formation. Now, if you can back off a little bit and then get above that, then the game is off. And there's all kinds of news about artificial intelligence. And believe me, David White, were he on the show here today, he really knows that stuff. So he can give you a lot of, information about how it works. But There's so much out there. In fact, yesterday when the Chat GBT program went out for 15 minutes, it was almost Panicsville in the major cities, I understand from my good friend John Jameson said everybody was panicked that they thought that Microsoft had pulled the product. And it wasn't that at all. It's just that there was a slight breakdown in some component, but they never tell me what those are. And you know what? Even if they did, I wouldn't be able to understand it. That's the main thing to look at. So that's primarily what we're paying attention to here today. Oh boy! People are Skyping me that usually don't because when I do the show, I don't like to have Skype on. But since I'm doing 3 shows in a row, I've got to pay attention to what's going on. And so I hear that little noise once in a while. It's a little bit frustrating, but not too bad. Anyway, the main thing that I think that you folks ought to get in your ideas of what's going on is what really happened to that Japanese yen today. That's such an important spot because we went above the 382 by just a hair's breadth. And then we've given back 120 points, folks, in the yen. That's $1,400. And the sad part was I was stopped out on the exact high tick, not close to the high tick, the exact high tick. I took a $300 loss. I was in short the euro, so the euro more than made up for it. The euro, broke off quite a bit. But had I not got stopped out, ifs and buts were candy and nuts, we'd all have a wonderful Christmas, and that wasn't Christmas this time. So I got stopped out. Now, my game plan is we've broken 120 points from the high. So I believe, and you know what? The 382. So I'll be watching that 382 tonight like a hawk. So if you belong to the 24/7 videos that I send out every day, that's going to be my lead thing is say, okay, I messed up, but all right, let's see how we can get back in without risking an arm and a leg, and that's what we're going to be doing. Hey, listen, I can take a $300 hit in the yen all day long, but not if I buy it at 151 and ride it all the way down, to those levels right in here, which was considerably a lot lower. So you got to keep your losses small, folks, and that'll keep you in the game. And the only way you can do that is by using, using some common sense. And that's really the main thing that you want to be thinking about as you look at this. I've got in front of me my book here from that I live by, this manual. You can see all the notes that I have. And this is when I learned what. I've known Mark Douglas so many years, but when we worked together here, we worked in the same office here. But he was doing his work, I was doing mine. But I wrote down everything that I thought was important right out of his manual on how to try to think about what you're doing when you're trading, because it's what you do after you put the trade on, folks. It's important. And boy, looking at the machine does not help you at all. I mean, zippo bupkis zero. I mean, it doesn't help at all. That's the main thing. You want to keep your losses as small as possible within limit. You can't put your stops too close. You can't put your stops too far away. So what you have to do is you have to decide, which of those things that you're looking at is going to be most important to you. And that's a dollar figure. In mine, if I have $10 in gold, $10 or $1 in the crude oil, and about 15 to 20 points in the S&P, those are my uncle points. I get beyond there, I know that the pattern's not working, but most of the time, they're going to go right to those numbers and then start to back off, and then you can change your stop so that you're break even, and you don't have to look at it. Like the gentleman, Mike, that was on there, he said he was basically looking, what we were looking at, and that's basically what you're trying to do, and nothing more, nothing less. There's not really anything you can do because you don't know what's going to happen next. That's it. I can't stretch it enough, folks. You just can't. I'm just typing. Someone's asking me a question about putting a stop in. Oh dear, I spelled something wrong. Hold on, I'm going to mess up here a second. Sorry for interrupting, but it's something that had to be done. But if you'll focus on the amount of money that you have at risk, then you're going to be far better off. You know what I mean? 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, folks, this is Larry Pesavento setting in for David White. And someone was asking the question, we were talking about this Japanese yen. This is where we were stopped out, folks. I mean, we sold it yesterday at this level right over here. So, and the market came down in our favor, about $300. We put our stop at break even. We got stopped out and boom, down she went. Now, what I'm looking at now, this move right here, folks, is just about $1,400 in the Japanese yen. That's 120 pips, okay? And now you'll see the rally back up here at this 136.20 level is going to be a 382 retracement of this. Now, I know from experience that this 382 pattern is going to work about 65 to 70% of the time if I sell it there and put my stop above here. That distance right here is about $600. So I lost $300 on this, and I'm willing to risk $600 on this one because I think this being the 382 right up in here is, and you can see by the way that it came down, something significant certainly happened. So I would be selling it right in here. What I'd like to do, and I don't always get this choice, is I'd like to see it take about 2 hours tonight to get up to this level. In other words, it bounce here is only like 32 to 35 pips. That tells me that that's pretty good. If it gets there too quickly, it's probably going to go higher. But if we get above here, then that distance is $500, and I'm willing to risk that $500. And someone asked the question, why didn't you put your stop a little farther away? Folks, I'm risk averse. I don't, and $500 is my maximum on a foreign currency. Remember, these things got $100,000 in them in the contract, so you're only risking $500 in something that trades $100,000. I mean, hello, operator. I mean, that's a $1,400 move in one day. That's the kind of action you like to see. This time, stop was placed at the wrong place, but not for me. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side in about 1 hour. If you stay with us, we'll be on Tom O'Brien's show.
Building wealth trading in the stock market seems impossible to most